Welcome to another edition of Around the Coin podcast. We have Federico Brokate. He's the head of US business for 21 Shares. He talks all about crypto underlying assets when it comes to ETPs and ETFs in the US. We talk a lot about regulation, the new administration, what's it like dealing with regulators and the SEC, and how do they get these products both in the US, in Europe, and even in Latin America and Central and South America. This is such an interesting conversation about the challenges, but also the amazing strides I've made, especially around Solana ETPs and ETFs. This was actually the world's first Solana ETP provider back in 2021 across the EU. So they know a thing or two about Solana and how they made big bets back at that time and their process. Such a great conversation. Check out Federico. Really great conversation, and we'll see you soon. Welcome to the Around the Coin podcast. I'm your host, Stephen Sargeant. We have an exciting guest as we had Federico Brokate. I tried. Head of the US business when it comes to 21 Shares. We're going to go deep into what you've worked on in the past, but I just want to maybe just give us a brief explanation of you, what you're doing, how you're doing it, and then we're going to talk a little bit about your origin story working at BlackRock for almost 8 years.
Thank you so much for having me. It's a pleasure to be here and to be with your listeners. Origin story. Wow, I haven't told it from that framework or that lens in I think ever. But happy to hop into it. As you mentioned, I'm the head of the U.S. business here at 21 Shares, and we are a global asset manager that provides ETFs, and we specialize in cryptocurrencies. And so all of our products track some form of crypto. Whether it be in spot single asset products or multi-coin products, you name it, we cover the full gamut.
And you started off, you worked at BlackRock for almost 8 years, a variety of different roles, responsibilities, and regions. It looks like you focus on Latin America, you focus on the Americas. Can you talk a little bit about your roles and responsibilities that you had? And, maybe if you encountered crypto at some point, just by way of investments, I'm assuming you must have come across a couple of paperwork, maybe even the white paper that you're like, hey, what's this? And why are people even asking us to invest in this?
Absolutely. It's a great question. So I started actually at BlackRock right out of college. So I was an intern and then I joined full time once I graduated. And like you said, I had multiple roles, initially focused on covering the Latin America region and expanding BlackRock's presence throughout Latin America. Very shortly thereafter, I switched over to the US ETF business, which is branded iShares, and held a variety of different roles and different functions. I got involved in pricing for products, for go-to-market strategies for new launches, expanding distribution partnerships in the US, you name it. I really held a variety of different seats there. But when it comes to encountering crypto, I want to say, like everybody else, I encountered crypto very early on, especially in collegiate days. But then from a professional setting, it was the Canadian ETF listings in 2021 that kind of sparked interest, at least for me personally and the organization more broadly, because it was the first time we had seen a fully regulated institutional quality product that we could imagine being in, investors of all types portfolios, especially on this side of the Atlantic. And so, 2021 was really that turning point where it became a really interesting topic, something that I began following closely. And eventually, when assets perform and they're delivering 2x to 5x multiples of growth every year, it's too difficult to ignore.
I'm curious. Obviously, I'm Canadian here, so I remember, through IQ going through that process, a very, very burdensome process, by the way. What were your thoughts about that? Do you think, right now, looking back, do you think hey, Canada should have really been on the map there when, they revolutionized that? Or it was hey, they had to go through a lot of work, a lot of legal implications, a lot of court hearings. Maybe it's not worth it for us to try and build something around that until it gets mainstream. What are your thoughts on that?
Yeah, I mean, look, Canada from an America's perspective was certainly a pioneer when it came to, authorizing the trading of these products in a public vehicle like ETPs. In my opinion, it was just a matter of time until the U.S. caught on and followed suit and did something similar to what we had seen in Canada. The two markets are typically very correlated, as you can imagine, one country being right next to the other, and you often see what happens in capital markets in one and compare it to your home turf, if you will. But it was a really exciting time in 2021 because you could see, eventually over time in the U.S. if this is allowed, all sorts of clients are going to be able to participate in this market in a very easy, convenient way.
And by the time that went live in 2021, were there already applications? Was there already processes going on? Like I know the Winklevoss twins, like they put something out like a decade ago. Like what was when that happened in Canada? Was there anything really brewing in the U.S. or were we still at a kind of a stalemate?
There was multiple conversations, and in fact, I think from the U.S. perspective, the futures market was certainly something that was interesting for ETFs. But that said, it was still a bit too early, right? Especially from a regulatory perspective, the asset class as a whole. I mean, if you go back to 2021, had a slightly different stigma than it does today, right? And so that evolution, that maturity, I think, is what ultimately allowed the U.S. to come into the fold and actually allow the trading of these products, and hopefully a lot more soon to come as well.
I'm curious, you just started with 21 shares last year. As great as the company is and the organization is, you're coming from BlackRock with crypto experience. I used to recruit back in my days, and to me, that's like having quads in poker. You're coming out with the best hand. How do you choose of which company you want to work with? I'm sure everyone's building up their digital assets, especially from a traditional standpoint. They're building up their digital asset teams and departments. How do you choose where you're going to go? What was interesting? I'm sure there was maybe a lot more sexier projects that probably wanted you on board too, to have that former BlackRock name that they can throw on the website. How do you choose where do you go?
Yeah, it's a great question, and something that I took a lot of time to think through and to really map out. I moved to 21 shares in June of 2024. And so by that point, the Bitcoin ETF, the spot Bitcoin ETFs had just launched in January of that year. Through my research process of understanding the landscape and who the other issuers were, not just in a US perspective, but globally, I came across this firm, 21 Shares, which had been managing crypto ETPs since 2018. Right. And so these guys had all the experience in the world, especially when it came to European vehicles, and getting that into the hands of clients of all shapes and sizes. I met with Hanny and Ophelia, who are the Stanford grad founders of the firm. They actually originally wanted to set up the company in New York City, but from a regulatory perspective, Zurich was much more amenable to managing and issuing crypto ETPs. And so they moved across the world, set up shop in Zurich, opened the firm, and really developed this culture internally of high conviction and passion for crypto markets more broadly. And so one thing I often tell individuals, either past colleagues or friends of mine, is the firm is full of people that just live, eat, breathe, and sleep with crypto. It is all we do and all we talk about. And so as someone that had been part of the ETF industry for quite a number of years at that point, it was very clear to me that crypto was going to be the next forefront, if you will, of innovation within the ETF space. And so I certainly wanted to continue being part of that growth and that expansion of the product set, and ultimately help a lot more investors get access to a market that I think is going to be quite revolutionary over the long term. And so that's where the 21 Shares culture, the team, the fit really made a lot of sense for me. And I joined to help grow our US footprint.
That's amazing. I feel like ETP and ETF are used interchangeably. Like just like in crypto, when people say wallet and address, they're used interchangeably. Can you maybe level set for us what's the difference between an ETP and an ETF? And it seems like ETPs were approved way before ETFs. I could be wrong in that, but maybe in the US, like what's the differentiator from them from like a regulatory standpoint or an approval standpoint?
Yeah, it's a great question, and really it comes down to some technicalities on the regulatory side of how each product is treated. But in the most simple, plain vanilla terms, an ETF is actually a type of ETP. So ETP stands for Exchange Traded Product. ETF stands for Exchange Traded Fund. And so ETFs are a subset of the ETP universe. And the designations have been used differently because in different markets, they're treated in their own unique ways. And so oftentimes in the crypto world, we talk about ETFs for US specific products and ETPs for European specific products. But the reality is it's nomenclature that varies from a regulatory perspective. The best way that I describe ETFs to my friends and to individuals that are less part of capital markets is really like you're buying a Spotify playlist. So instead of you picking your own songs to create your own playlist, you might go on Spotify and look for something like Today's Top Hits or Rap Caviar or Baila Reggaeton if you're from Latin America. And these are pre-curated playlists that you're able to access and listen to. And that's exactly what an ETF is, right? It's a curated set of stocks or bonds or anything else that can go inside the single fund. and you can access it just like you can buy any other security in the US. And so it really helps simplify the creation of a portfolio for individuals.
And then why is there this regulatory pressure? If it looks very similar to traditional, financial products, and they're just kind of changing the underlying asset, why is that maybe a little bit more difficult sometimes for regulators to allow? Like, why are they allowing maybe a money market fund versus like a digital asset? What, like, if the structure around it seems very similar, why is the underlying asset so difficult for maybe some regulators to wrap their head around?
It's a great question, and really, in my opinion, it comes down to one thing, which is whether crypto assets are considered securities or they're considered commodities. And so, ultimately, if it's a security, it's much more straightforward because it can fall in line with the existing frameworks for equities and bonds and futures and other securities in the U.S. If it's considered a commodity, a lot of the things that we are trying to do from an ETF perspective is actually quite new for the industry, and so regulation needs to adapt. It needs to fit kind of this new regulatory framework or create a new regulatory framework that's crypto specific that allows us to do something like what we would do in a typical ETF world. So it really comes down to that. And when it comes to, why should crypto be considered a commodity or a security, then it's a whole other ordeal of how these different projects are actually coming to market and what regulatory status they're claiming and what their filings look like. But for the most part, when it comes to the big crypto assets, whether it's Bitcoin, Ethereum, et cetera, the SEC has fallen firmly on the side that these are commodities. And so that's where we're in a little bit of a gray area that's quickly clearing up here over the next few months.
And if it does fall under a commodity, then what's the issue with that, right? Like gold's a commodity, and now gold is just as, maybe not just as volatile, but there's no really underlying value under gold based on what people demand for it and what people believe its value. That crypto's kind of in the same realm. So is there any reason why it would be distinguished different than something like gold being included under an ETF or an ETP?
It's a great question. It's a great question. And really it comes down to the fact that it's a completely new asset class, right?
Right.
And so the regulators are adapting to, let's call it the idiosyncrasies that are related to crypto. For example, if it was just a single gold related product, I think that would be a much more straightforward concept for regulators to get their head around. But the reality is that the majority of crypto does not operate on traditional financial infrastructure. And so the terminology is different. The way that things are managed is different. And so all of this has implications for the regulators when they're trying to assess retail investor safety at the end of the day. And that's really what they're trying to prioritize, is making sure that individuals have the information that they need to be able to make the right decisions from an investment perspective, but then also that they're actually receiving the value that they're expecting when they're investing in these products.
I think you make a great point. Now I think of it like, yeah, if there's a physical gold, you can go to the vault, you can compel the vault company to turn over that gold. But when it's on a digital blockchain, it's like, who are you going to call? There's no one to call. You can't get access to it. That's a totally different conversation from an investment
Yep.
perspective. So I completely agree. Was there anything else that people were trying to include in ETFs and ETPs that might have, had not law enforcement, but regulators being like, did we have a meme coin ETP or NFT or a metaverse one that kind of clouded their judgment because it was so easy to point to those and say, well, those failed, so you're definitely not getting something like Solana or something else past us.
Yeah, I think there's a lot of human psychology at play here whenever any of these things are happening, whether it's on the regulatory side, on the issuer side, on the client side. And obviously crypto broadly is a new technology, right? Not more than 2 decades old. And so for individuals that are trying to set up rules and create frameworks for what's going to be allowed and not allowed, it takes time for them to get familiar and comfortable with the environment that they're operating in. New technologies are being tested, and there's new use cases that are popping up every single day. And what we do know about crypto for certain is that it never looks the same between one year and the next. And so how do you create rules for a brand new emerging technology that's going to shapeshift over the next, let's call it 5, 10, 20, 30, 50 years? And you create rules that are going to continue protecting investors throughout all of that transformation. And so it's certainly a daunting task when you're completely new to the topic and you're coming at this from a more traditional investing lens.
It's interesting because 21 Shares launched, I think it's the world's first Solana ETP in 2021 across the EU, and you've already filed for a US Solana ETF last year. Obviously, to me, that's growing demand. What made the company look at Solana, even from a more traditional sense, because there was a time period, and there's still a time period where Solana was associated with like pump fund and meme coins and rug pulls. Like, what made them look twice at Solana and be like, this is going to be something that we can bet on long term?
Yeah, it's a great question. And actually, one of the things that I love answering the most because the answer comes back to the fact that 21 Shares is very research driven. So we have one of the largest research departments in the industry, and we're focused on understanding the fundamentals of every one of these projects and how they compare and stack up against each other. And so back in 2021, this is before my time at the firm, but from what I gather, the founders and the research team quickly analyzed that Solana has very differentiated value proposition versus existing technologies at that point, right? Namely Ethereum in some cases. High throughput, low fees, scalable design. They had a vibrant developer ecosystem at that time, even if it was focused more on the speculative and NFT side of things. But ultimately, the technology that Solana was testing, whether it's through NFTs or DeFi or anything else, has broad-based applications to any sort of financial market as well. And so, yes, the near-term use cases might have seemed frivolous in some cases, especially back then. But today, now that we have Clarity and Genius Acts passed in the US, we're seeing the growing momentum and the tremendous explosion of stablecoin usage on Solana. And all of that we're only capable of doing that on Solana because of the testing and the learning that the network went through earlier in the days of their existence.
That team needs a raise because that's a huge bet in a huge turmoil market, and then that saw the basically the chaos that ensued, whether it was the NFT metaverse market, whether it was Celsius, FTX. You have to give credit where credit's due. That was a big play in a time where the industry didn't know, heads from tails. I'm curious. You've already applied for the ETFs, the Solana ETF in the US. Do you think that there is going to be this is going to be received widespread? And is there a lot of pent up demand, or we just is it like the Bitcoin and the Ethereum ETF, or we just can't wait for the floodgates to open?
Absolutely. Look, we're very, very excited about the potential for a US launch. Can't say too much about timing or the like because we're in the current phase of conversations with regulators and stakeholders and partners and the like. But we are super excited, and we think there's going to be a lot of demand for this asset. One thing that I often tell people, and I think it's lost on the crypto community, is the first couple of years of an ETF outside of crypto are typically quite slow, right? Different investors are waiting to see how these products actually behave and perform before making an investment decision in the product. Crypto is the exception, where we've seen, the Bitcoin ETFs completely surpass all sorts of expectations and break all sorts of records for the industry. Ethereum as well over the last 18 months, let's call it, has performed fantastic from an ETF perspective, always in the top rankings of the leaderboard for flows. And so Solana, we expect, will be a similar story for a couple of reasons. One is the user base for Solana has grown tremendously. Right, I think there's 57 million monthly users on Solana now, or something in the 60s range. There's over 13 billion.
Too, right? Like these guys and girls, they're active. They're not just passively using Solana. They're in there doing things that I can't even describe.
Absolutely, and that's what's going to benefit the ecosystem the most is like that active engagement and developing of the blockchain. But yeah, outside of that, there's about 13 billion in stablecoin assets now in Solana. Genius and Clarity Act as tailwinds, which are only going to encourage more and more participation through stablecoins. And I think one thing that the crypto community is very well aware of is the importance of marketing. And I think the Solana Foundation and everybody that builds on Solana has done a really strong job at promoting the chain and promoting their value proposition. And hopefully that translates then into ETF flows from investors looking to get a piece of the action.
There's a community. So I was at the Accelerate conference with one of our clients, Marinade Labs, earlier this year at their event, Stake Point. The community there, like the way the foundation comes out to support each one of their community members, like there's a different community vibe than I feel like that's been on Ethereum or other blockchains, where everyone's really working hard to bring more people into the ecosystem, not just profit of whatever project they're working on in the ecosystem. And I haven't seen that in any other blockchain, much less any other industry. What are your thoughts on that?
Yeah, I totally agree. I think that the job the Solana Foundation has done here from an ecosystem development side is fantastic. And I think they really were the pioneers in fomenting that growth on chain by supporting their developers and their community more holistically. And look, to us, it's a great sign of where things will be headed, right? At the end of the day, when you're investing in crypto, the way I like to compare it to I would say more traditional investors is really like you're investing in a liquid VC fund. You have daily 24/7 mark to market of a VC style investment with the same risk and return profile. And so what Solana is doing is fomenting as much growth, as much user activity on their chain to hopefully continue supporting the growth of the network overall.
You mentioned the Genius Act. You mentioned regulations. Like you were at 21 shares last year, and before Trump, and now after Trump. How has that changed? Whether it's the momentum of the industry, the conversations that are being now had with regulators. Can you give us the day and night version of before and after Trump?
Yeah, absolutely. So there was really two things that were achieved, in my opinion, between the Genius Act and the Clarity Act. Essentially, for market participants now, we have a much better idea of how stablecoins are going to be issued and how they're going to be managed in the U.S., which will give a lot more institutional investors comfort with participating in the market through stablecoins. The other thing that we learned was how regulators are going to view that initial question that we talked about at the top, around whether an asset is going to be considered a commodity or a security. And so for issuers of ETPs like 21 shares, this also helps us a lot because we know which regulatory regime we're going to fall in depending on which products we want to launch. So all in all, what this is really doing is helping create frameworks for what's going to be allowed and what is not going to be allowed. And then the market now is in charge of actually going forward and developing the solutions that are fitting of whatever use case we're looking to meet. The before and after, I think, can be seen very clearly in Ethereum and Solana prices, right? Between, I would say, February of this year, February, March, to now, we've seen a fantastic bull run for some of these assets. And I think it's because these regulatory changes really create the framework for moving assets on chain, whether it's stable coins and their uses, which we all know are really impressive and I would say the killer use case for crypto today. But then ultimately, once you've normalized having dollar-based transactions on chain, what are the next assets you can begin bringing on chain? And that's why we're beginning to see all this momentum around tokenization, because you're able to imagine a world in which you're not just transacting with dollars, but you can also transact with Apple stock or an ETF or anything else that might have value moving within the guardrails of crypto.
I'm curious. It's been very weird for Solana. Obviously, it started out with a little bit of the outages. Then we got into the meme coin market. But very rarely do you see like a thriving meme coin market and a thriving interest from traditional financial institutions that seemed like it was actually happening simultaneously, like pump fund, but also staking on Solana through validated or through KYC validators. I've never seen this combination of like extreme speculation and culture and the most traditional of the traditional looking to launch their own tokens or collaborate with other Solana foundations. What do you think is driving a lot of this interest and growth, even though that there's still a lot of speculation on one side of the table?
Yeah, look, I think first off, the diversity in the use cases for a network is fantastic, right? You want to have a diverse ecosystem, and you want to be the fact that you can cover more institutional type use cases and then also more crypto native type use cases. I think it just shows the breadth of the technology that we're talking about here. Ultimately, to me, it comes down to the fact that there's low fees and high speed on Solana, right? And so if you're able to factor those two components in, you'll see how quickly, if you're imagining a world in which stablecoins become one of the primary ways that payments are processed, that's the exact combination that you would look for. And same goes for NFTs and for more speculative activity. You don't want to necessarily be dealing with lags or paying high fees to use a network. You want to be able to move quickly and benefit from the same, let's call it, traits of Solana. So no, absolutely. I think it's a great thing to have that diversity. And I think it comes down to how scalable Solana has really made itself.
I think you raise a great point. The fact that it can balance both and doesn't have to pick one is exactly why there's so many people coming to it. If you can go to a stadium and watch a concert and a baseball game at the same stadium versus two separate stadiums, it makes people really want to go to that stadium, right? You offer a few staking products in Europe. Can you walk me through maybe the fundamentals of those staking products? And is it yield from protocol activity? Is it yield from like loan and borrowing? I'm assuming it's maybe the protocol activity, the native staking yield. I would love for you to explain how those products are doing and because that protocol activity might be there, is that's what's really driving that as a game changer?
Yeah, no, it's a great question. It's something that we're proud to have been offering in Europe for quite a number of years now, and we're excited to potentially bring to the US as well. Our staking operations in Europe, as you mentioned, are primarily around securing the networks that we're staking through. And so our Solana ETF, just to use as our continued example, we have about 1.5 billion in assets in our European fund today, and we stake a pretty good percentage of that fund. The way it works is our portfolio management team has a formula that analyzes all sorts of parameters around the product, around the staking network, around the underlying activity, and it spits out a percentage that we should stake that allows us to meet liquidity needs for the product, but also allows us to maximize the yield that we're providing to our investors inside of that product. And so it's really a bit of a balancing act that we've been able to fine tune over years and years and years of managing this process. To make sure that we're maximizing the return for our investors while also making sure that we're maintaining the right liquidity requirements for our fund. In regards to all the different methods that we could generate yield, our products are very much focused on the description that we have in our prospectuses for each one. And so we are not ETF issuers that are necessarily shifting and moving around and doing things that are going to change month over month. Products are very reliable, very consistent, and what you do this month is what you can expect to see for the following month as well.
Why Europe though? I feel like Europe's always been, especially recently, has been by the tech aficionados have said Europe too much regulation, this and that. But it seems like you're able to release products in Europe that you can in the US. Why is Europe so forward thinking with some of these traditional slash now Bitcoin or other crypto underlying asset ETFs and ETPs? Why are they beating the US to the market, similar to how Canada did?
It's hard for me to say and put myself in 2017, 18 when this was all happening for the first time. What I can, hypothecate is this was largely due to the fact that especially the Swiss market was very familiar with different types of asset classes, right? So whether it's gold, silver, and more commodity type products, but then also with anything that you can find around the world. The Swiss market has always been kind of at the forefront of investing and at the forefront of allowing different types of investment schemes. And so I think that culture of being open-minded to different types of asset classes really benefited 21 Shares in particular, because we were able to set up shop there and begin offering these products to different types of clients all over Europe. Now, how much of that was intentionally by design and how much of that was a bit of fortune from a regulatory perspective is hard for me to exactly pin down.
Now we know Solana's amazing growth that's happened even just in the last year or so. Do you believe there's other blockchains that you're seeing or keeping an eye on that are getting market share? Maybe not as much as Solana, but they're getting market share and maybe just interest from investors, right? Whether it's a hype or something else, you're like, hey, a lot of people are talking about this all of a sudden. Might be worth a second look for us as an organization.
Absolutely. Yeah. I mean, look, I go back to my thoughts on our research department and how forward thinking our organization is. We take big bets on projects that we have high conviction in. And by bets, we simply offer product and we're able to bring capital into those ecosystems through our ETPs. There's a few others, and I think there's a whole trend around emerging blockchains that have differentiated technology and different value propositions that they've learned from seeing the experience of the more, let's call it, long-term or existing protocols like Ethereum, like Solana, and they've been able to, in their perspective, improve upon their design. A couple come to mind, like a SUI, for example, as a project that has a differentiated technology and value proposition. Hype, of course, or the Hypernative team has seen a lot of success, especially this year, and our team internally is very very bullish, if you will, on some of these assets. And the search continues. What I would say is that there's a lot of interesting projects that will continue to develop, and it's not going to be a just now thing. This is going to be an ongoing issue or an ongoing trend in our market, where disruption is where we come from, and it's going to continue happening within our space.
And I don't know if this is like competitive advantage or proprietary information. How do you normally vet? Like, I'm assuming that you're not just on up onloading Solana without maybe speaking to the foundation? Like, how do you normally vet these projects or speak to some of the organizers or larger initiatives that are on these blockchains or the blockchain foundations themselves? Are these deep conversations? Are you just looking at like, hey, this is what the consumers are demanding, so we got to give what our consumers want? How do you kind of balance
So I absolutely do think this is a competitive advantage for 21 Shares,
that?
because we've been in communication and in partnerships with a lot of these foundations directly for many years. And so our research team is very well connected to all these organizations and understanding what their roadmaps look like, what their preferred use cases are, where they think their growth is going to come from. And so we're able to engage with these organizations and have really smart conversations about which ones we think have, let's say, what it takes to disrupt whatever part of the market they're going after. And so, yes, we're able to have these conversations and leverage our partnerships to hopefully bring more product that our investors and our clients are going to benefit from.
From a business lens, like I used to work at a top crypto exchange, and if there's a pair that's not doing so well, like eventually the exchange would drop it because it doesn't have much, volume, transaction volume, and it's really ripe for really ripe for market manipulation with some of these low value trading tokens. Does that work in the same world as ETP or ET? Like if you're not getting a lot of capital contributed to it or invested in it, then you might decide to like remove it altogether. I'm not sure, maybe not even speaking directly about 21 Shares, but in general, if like a low performing ETP or ETF, do you drop it? Do you reconstruct it? Do you combine it or merge it with other ETFs? Like, how does that work?
Yeah, and the answer to that question is all of the above. And it happens to ETF issuers around the world, right? Oftentimes we're making concentrated bets on products that we think will have market fit. And for one reason or another, sometimes even reasons outside of the issuer's control, the products might not perform as expected, right? And in the case of a crypto ETF issuer, I think this is even more the case because a lot of the times, back to my VC style risk return profile comment, whenever you have an asset class that has such volatile results and such, let's call it a big divergence in outcomes for different projects, you're going to see some projects that make it and some that don't, and that's actually part of the landscape and part of investing in crypto. And so for us, absolutely, we have a biannual process where we review our product suite, make sure that we're seeing the performance from the product that we want to see, and that our clients are benefiting from it. And if not, there's always optionality to either sunset the product or to merge it with another one, or to change the investment prospectus if need be. So yeah, we like to make sure that our product suite is fresh and up to date.
I love that. I'm curious. You mentioned the Genius Act. We talk about regulations. We talk about the Solana ETF approvals. Is there anything that the regulations aren't? I know we had to make some concessions for Solana ETFs when it came to like staking yield and the rewards. Is there anything that these regulations aren't covering or aren't including, do you think, that will be needed to push it forward that you would love for them to take maybe a second look at?
It's a really good question, and the honest answer to that is I think we need to first digest the current wave of regulation that has come into the market. Right, Genius and Clarity Act, huge transformational bills, which I think is going to have a deep impact in crypto markets broadly for the years to come. SIM goes for the quantitative listing standards for ETFs, right, that we received from the SEC and from the exchanges. They put out a set of rules that basically determine eligibility for ETF standards, and that's also going to evolve over time. And so my perspective here is I think we need the market to digest for a bit of time what the current rules that were in place are actually going to do and allow us to do. And then actually just process this before we figure out, okay, as an industry continues to evolve in A or B or C direction, what else do we need to complement the current existing rule book? Because like I said earlier, crypto is not going to look the same in 3 or 5 years from now, and regulation will have to keep up in a more proactive way.
For something like an ETP that might be easier to approve than an ETF, how long does it take you to spin one up? And the reason why I'm asking is in the context of like, hey, Dogecoin, Elon tweets about Dogecoin, all of a sudden now there's an interest in Dogecoin. Trump talks about a digital asset stockpile, and you're like, hey, we might not have XRP, we got to include it. People are going to want it. They're stockpiling it. Like, how fast can you spin something up? Or is there just a standard process where we have to vet for so long or for, so many iterations of our vetting process before we're going to release anything, no matter what the demand is from the consumers?
Yeah, no, it's a great question. I think it varies by market. So, assuming that we've done our research due diligence and that's all been completed on our end, our time to market in Europe is alarmingly fast. We're by far, and I think I can say this, we're by far the quickest to launch issuer in the market today. Whether it's 3 or 4 weeks, if we have our due diligence done from a research perspective, we are able to whip up a product. In the US, it's a little bit different because each application or the S1 needs to be reviewed and vetted by the SEC. And so it's not so much on the issuers to do their homework quickly, it's more so waiting for the regulator to approve the product. And so that is going to continue happening. And I think it's great actually for investor protection to have that process continue. And so, I think it went down from a couple of years to probably a few months.
And not speaking on behalf of 21 Shares, especially because you weren't there, did you feel that the SEC under the Biden administration was like just saying they weren't approving it, they were taking long to approve? Like, was it just a cumbersome process where they wouldn't be rushing to approve it, then they would, they would deny it without enough, context or information, and then they would take it through the court like, were they just buying time? Was it just like, hey, if you want to spend the money to really get this to market, it's up to you, you're going to have to blow that money? And then they added on top of that the lawsuits to go with it. Like, is that what you felt the landscape was like during Biden?
Yeah, look, I think what I can definitely say is the environment with the SEC right now is the most constructive I have ever seen it when it comes to crypto regulation. It is a very proactive and very business friendly SEC that we are working with, and that certainly wants to help continue to monitor protections for investors. But they're much more forthcoming when it comes to how they can learn and understand the crypto industry and how they can keep investors protected within the scope of what digital assets are more broadly. I think before, with the prior administration, it was the first time that we were biting into the pie, if you will, or into crypto markets. And there was a lot of learning, institutional learning that needed to happen on what is crypto, what is blockchain, what is Bitcoin, what are all these assets, why is it going up 300% in short periods of time and then going back down 300%? How are investors going to be protected from this type of volatility? Are they ready to manage this type of volatility? There's a certain level of questioning and understanding, I think, that needed to happen before regulators would get comfortable with this. Now, I think having done all that hard work and that homework at the SEC and at the regulatory level, we're now seeing an SEC that is much more friendly and open to seeing diversity of product in the US, hopefully, and different types of structures as well.
The Solana ETF seems almost inevitable. I don't know which application will go through, but I think just like the Ethereum ETF, it's kind of like, it's coming at some point. Where's the money going to come? Where's the capital going to come from? Are they pulling it from existing ETFs, Bitcoin, Ethereum? Is this going to be brand new money? Like, where does the new money come from? Even when the Bitcoin ETF was launched or the spot ETF was approved, where does all that new billions of dollars come from? Is it existing investments? Like, where's that flow of transfer, that transfer flow come from?
Yeah, it's a great question. So I'll start by just breaking down quickly like Bitcoin ETF holdings and who owns those. In the US, about 60% of AUM that's invested in crypto in Bitcoin ETFs comes from retail investors. So that's people like you and me that are trading on Robinhood or trading on Fidelity or Schwab, and they go on the platform and they see 21 shares Bitcoin ETF, they purchase the ETF on that chain, on that platform. The second group, which manages another 20%, so 60, 20, you have about 80, are what we call very crypto native financial advisors. And these are intermediaries or individuals that manage assets on behalf of their end investors. And so you give a financial advisor an amount of your wealth and they manage it for you and they invest it for you. The more crypto native financial advisors in the country are already beginning to allocate to Bitcoin ETFs. And so that makes up about 20% of Bitcoin holdings today. And then the final group I would really classify as global hedge funds. And these are organizations that are engaging in basis trading, which for people that aren't as familiar simply means you're selling the futures product and you're buying the underlying spot. And so there's a delta that you can make or an arbitrage, that opportunity that a lot of hedge funds around the world are taking advantage of. And because of the size of Bitcoin ETFs in the US, they're preferring the liquidity profile of these products here versus products in other markets or jurisdictions. And so when it comes to Ethereum and when it comes to Solana, we're expecting a pretty similar breakdown. I would say initially retail would make up a larger share of those assets. And these are individuals that are probably more crypto native, And there are individuals that probably have tax deferred accounts. So if you have a Roth IRA, or if you have any sort of investment account where you don't have to pay near term taxes, you can invest in Bitcoin, you can invest in Ethereum, you can invest in Solana through the ETFs, and you have all of that runway and that upside potential without the tax burden of a typical brokerage account. And so there's lots of reasons why individuals, whether they're crypto native or not, might pick a Solana ETF. But we certainly expect those to be some of the early adopters, along with your occasional very crypto native financial advisor as well.
Which there's still, I don't think there's many of those. I know there wasn't when I was asking my financial advisor, should I invest my retirement savings in Bitcoin? Is it now that the executive order has been passed by Trump in order for crypto to be included in 401k? Does that mean your products, or were your products already able to be included just by the nature of them in 401ks? Or is it different products that are now able to be included in 401ks? And for people around the world, that's like the retirement policies.
It's a great question. And unfortunately, the answer to that is most 401k plans do not support ETPs. Or ETFs of any sort. And so typically...
So it doesn't matter whether it's crypto or non-crypto, they just don't support those type of financial products.
Exactly. They're typically built on what's called either basically index mutual funds is the best way to summarize it. And so they look like an ETF, but they're not exchange traded. They operate often like an ETF, but you can't find it on you open Robinhood, you probably can't find the index product or index fund version of the product. But oftentimes they perform similar, they perform similar investment objectives as the ETF counterparts. So that said, it'd be awesome to get more support for crypto ETFs within 401k plans, but the railing right now is just not in place to do so.
So whether it's crypto or non-crypto, they're not going to accept those type of products anyway. So the fact that crypto's allowed into it doesn't change much. But wouldn't they want to include those type of financial products that look a lot more like the traditional financial products versus like holding Bitcoin directly?
Well, actually, it's a really interesting point, because the history is a little bit different, where mutual funds came before ETFs. And so the most popular way of investing used to be investing through mutual funds. And so 401k plans were all designed from an operational perspective with the mutual fund in mind. And so when ETFs come along, that was a disruptive technology to a lot of these plans. And the 401k market just hasn't caught up from an operational perspective to allowing ETFs. And believe me, ETF issuers around the country have been pushing for 401k plans to allow ETFs for a number of years. So yes, absolutely. I do expect at some point that will shift and change, whether it's for crypto or for non-crypto assets. But for the time being, it's just there's not too much that you can do.
Makes a lot of sense. I seen, when you're working at BlackRock, it seems like you had, some insights and some roles and responsibilities around LATAM. I believe you're from Latin America. What's the difference between the markets? I know those markets with stable coins are picking up, obviously a hedge for hyperinflation and inflation. What are like the ETP, ETF markets like there from a digital asset perspective?
Yeah, it's a great question, and actually a really exciting one for us to answer, because as of yesterday, we cross-listed 6 of our ETFs in the Brazilian market. And so now you can find 621 shares ETFs in Brazil, and you can access them through what's called BDRs or Brazilian Depository Receipts. These 6 funds make us the largest issuer in Brazil by number of products and diversity of product offering, which we're really proud and excited about. But what I would say is LATAM has overall has a very, very strong crypto community. And I am from South America. I'm from Colombia personally. And one thing we've seen is that there's a lot of investing in crypto, but through banks that offer spot access. And so local banks will often facilitate those transactions for local clients. And because we haven't seen a lot of cross-listing opportunities outside of Brazil up until now, the US and the European ETPs haven't necessarily been able to participate in the flow gathering from those markets. Now, we expect that to change, absolutely, whether it's in Mexico, whether it's in the Andean countries like Colombia and Chile. At some point, we do expect them to become buyers of US-listed ETFs as well. But for the time being, it's been much more just spot exposure that the local community buys through banks.
And just so people know, you were talking about Thursday, September 25th, as we're recording on Friday, September. So people don't get confused when you say yesterday. You meant yesterday, Thursday, September 25th. I'm curious, is Brazil like the main? Is Brazil like the first stopping point, and then you expand from there? Is that because that seems like for a lot of the fintech and crypto projects, it always seems like Brazil and maybe even Argentina are usually their first stop before they start expanding into other countries. Do you feel like that as well from a traditional financial product with underlying crypto assets?
It's a great question. And I would typically, when it comes to non crypto assets, I would typically say that Brazil is actually kind of a market of one when it comes to analyzing the South American region. It's typically Brazil and then what everybody else is doing. It's Brazil from a capital market size perspective is by far the largest capital markets in Latin America. So there's certainly a ton of opportunity there. But that said, it usually does not follow suit with what Mexico or Colombia or Chile is doing, and it typically has its own rules of the road, if you will. When it comes to crypto more broadly and like thinking ahead, I definitely expect Mexico to be one of the biggest markets because of the cross-listing regime that Mexico has in place. And so when it comes to traditional ETFs, we're actually able to list US 40X funds in Mexico that local retail investors or institutional investors are then able to buy. That has not been approved yet for crypto. And so that is the evolution in Mexico that we're waiting to see happen. Similarly, like for South America, for the rest of South America, we're waiting for that cross-listing approval for crypto products and to see hopefully some institutional demand for those products as well from the pension regime there.
Is there a reason, especially now that you're based in the U.S., is there a reason why more U.S. corporations aren't putting Bitcoin on their balance sheets in any way? And do you think there's a major pitfall from at least dabbling in it, from not dabbling in it by these companies?
It's a good question. I mean, it was certainly this year, I think it's the trend in capital markets of seeing, these DATs or digital asset treasury companies come online. And especially in the US, they've oftentimes been rewarded with a lot of investor optimism whenever the switch to, being a DAT happens. What we're seeing, though, more recently is that the adding or the addition of Bitcoin to a balance sheet is becoming a board level issue and not necessarily a C-suite level issue. The reason for this is it really materially changes the risk and return profile for a company once they begin adding Bitcoin to their balance sheet in a real way. And so we actually saw some rules come out from NASDAQ and NYSE a couple of weeks ago requiring proof of this board level approval before companies add Bitcoin to their balance sheet and begin trading on their exchanges. And so really it comes down to a difference in risk and return and kind of overall objective and mission for the company and then making sure that it's aligned with what the board and what investors in the firm want as well.
That's super interesting. I'm curious, where do you picture this industry in the next? I know a lot has changed in the last 8 months. Where do you picture the industry in the next 18 months? Is that, are that's the new, SPACs? Is that the new hype train with stable coins involved? Does it do stablecoin ETPs or ETFs? Do those make sense just by the nature of what stablecoins are? I'm curious of your thoughts on that.
Look, yes, I think all of the above is going to be around in the next 18 months. I think we're going to see a new level of product availability in the US as well, whether it's in the single asset trackers or the index product category or staking products. I think we're going to see all of those come online, especially in the ETP and ETF world. I do think that will continue to have a place in the market as well. I do think there was some I would say, hype around them this year in terms of their ability to raise capital for projects. But look, at the end of the day, as a steward or a fan of the crypto markets more broadly, what we all want to see is more capital coming into the ecosystem. And so if it's through DATs, if it's through ETFs, if it's through direct purchasing on DEXs, I think that's all fair game and fantastic for everybody involved. Now 18 months from now, do I think we're going to see a stablecoin ETF? There's always a search for yield in the ETF market and a search for some of those returns or differentiated returns. And so why not? But I do not think that they're going to be let's call it the most mainstream products.
That's super interesting. Any other exciting announcements outside of, the Brazilian launch of some of your products or the cross-border launch? I'm actually curious. You were at the New York Stock Exchange, on FinTech TV with Remy Blair, having a conversation, talking about similar subjects. What was the atmosphere like? Is it very digital asset focused when you go there? Are people talking more about digital assets? Or are we still talking about what Tesla's doing and, maybe some of these traditional FANG companies? Or maybe the conversations around AI, what were the whispers you were hearing? Everyone's talking there. So what were some of the things that were sinking in for you?
Yeah, it's a great point. Look, the FinTech TV team and the New York Stock Exchange floor is one of the coolest places I think to visit in New York City. It's a really infectious energy level, and all the buzzwords are kind of being yelled out at once, and with all the colors and all the numbers and all the streaming lights. I think, look, AI continues to be front and center on all investor minds. Crypto and I think more traditional asset classes are actually converging a bit, and they're becoming more synonymous with each other, and no longer is crypto kind of this isolated thing over here that people sometimes talk about in kind of like a vacuum. So I would absolutely echo kind of that sentiment, which is crypto is becoming more mainstream. It's becoming more of an attention grabber, and it's hard to ignore when you continuously perform at the rate that the market has.
I'm curious, what are your thoughts? You said you saw crypto personally early. What are your thoughts about, like, ETFs? This is not the Bitcoin ethos. It's supposed to be decentralized. They're not holding the underlying asset. What are your thoughts around those conversations? Or is it more important, like, hey, this is getting crypto into more people's technically hands and more people are interested in it? And naturally, they'll go down the rabbit hole of checking out DeFi or NFTs or, staking on Bitcoin or whatever the new hype thing might be in ordinals. What are your thoughts about, like, hey, this is not really part of the original ethos versus, like, hey, I thought you guys wanted adoption and the institutions were the gateway to do so, and this is what we're bringing you?
I think that's a pretty good summarization of my POV. Look, I think ultimately all these products, whether they're ETFs or a bank offering access, it's all bringing capital that's allowing builders to continue building in the ecosystem. And so, to the extent that crypto native solutions are able to go out there and the use cases compete with legacy offerings from traditional markets, that's when crypto is going to win. But for now, what we need to focus on is bringing more and more resources into our crypto community so that individuals can continue innovating and building companies that are going to challenge the existing incumbents from outside of the crypto world. So that's my personal perspective now on, is it too centralized or not? I think it's a necessary step here in the maturity and the evolution of the industry, if you will, to get us towards where we all think that this market can go and head in the next 5 years.
And it depends on what you want. Do you want a big business or do you want to be a libertarian, which is fine either way, but you can't, it seems like you can't get both bites of the apple. You can't be, hey, we're not doing KYC and still build a big business these days. Any other exciting announcements coming out of the 21 Shares team?
We have a lot of new products potentially coming to market here in Q4. So I would ask everybody to stay on the lookout. Depending on what your investment preferences are, there might be something coming for you here over the next couple of months. So we're really excited.
I love the suspense. A little something for everyone. Where's the best place for people to find you, Federico? Are you LinkedIn, crypto, Twitter? Do they got to meet you down? Do they find you on the trading room floor? Like, where's the best place to connect with you?
They can find me in New York City anytime, but no, on Twitter, you can find me at Fede_Brokate. And then you can find 21 shares underscore US for our company account. And then 21shares.com if you want to read a little bit more about our firm and read our research.
Is there a huge difference between, like, your U.S. team versus your global teams? Is it like, is there jurisdictionally you have to have separation? Like, I'm curious, when you say 21 shares like U.S., is there a huge discrepancy there has to be, like, legally or regulation wise?
Yeah, it's a compliance difference that we have to have an account for the U.S. business and one for the European business, just so we can cater towards what regulators in each market want to see. But otherwise, it's one single team, and we're all working together on both sides of the Atlantic.
I'm curious. You feel like you have an entrepreneurial edge to you. Like, you just feel entrepreneurial just by the way you talk. Is there any books that you were reading, or any podcasts that you read, or anything that has, like, really shaped your mind into these traditional markets, but still has you, like, degenning every now and then? Like, for me, it's probably I listen to a lot more all-in podcasts than any Canadian should, which has me, like, very pro-Trump all of a sudden. But is there is there anything that you're reading or listening to that's of interest that you think to other people?
So I'm one of those people that I listen and read things that have nothing to do with my day to day life.
I love
So
that.
I will listen to podcasts that are related to crypto. All of the popular ones that you can imagine are certainly on my frequented list. But I think the last book I read was on vacation in August. I read The Will of the Many, it's called, by James Islington. It's completely like, Star Wars type book, nothing to do with crypto or with traditional finance. And then on the podcast side, I've been really into, it's actually a UK podcast called The Rest is History. which is it talks about all sorts of like historical moments and like kind of reanalyzes them and talks about motivations and the characters involved and all that stuff. So I get far away from the day to day when I am in my personal time.
I really appreciate you taking the time, Federico, out of your busy schedule in New York on a Friday to join us today. Congratulations on the launch, and hopefully we get to meet in person soon.
Would love to. Sounds good.
Awesome. Thanks so much.